Hey everyone, I wanted to go ahead and take a look at the SPY and today's trading session. If you have been following my videos, we've been following this head and shoulder pattern on the SPY, which is a bearish pattern. And so I've been in a bearish mode since we formed the right shoulder, and was waiting patiently to find the best opportunity to go ahead and add to a short position. And today was the day that, if you were patient, gave you many opportunities to set up positions short. We had followed the price up into this area where it formed the right shoulder, and on this candle here I sent out messages to lighten the load on any positions you might have profit and close any that were weak. So the following day we had a breakdown of the neckline here, and in the previous videos I talked about what could happen now that the neckline was broken, and it wasn't a surprise that we went back up into this area. I said that we needed to retest the 10-day and the 50-day moving average. This here is the 10-day, this here is the 50-day. So we got a nice gap up on Monday, and I think that was a bull trap. People were going long here, probably thinking the pullback was over. But if you watch the videos, to watch the 10-day and the 50-day and see how price was behaving. In yesterday's video, I talked about this line of resistance, and we didn't even touch that line of resistance. We had three opportunities or three signals to get bearish on the market today, or the S&P today. So the first signal was the gap down here below the neckline into the 50-day moving average. And the second signal was when we went back up to the 10-day line and we got rejected at the 10-day line. And the third signal was when we broke down of the 50-day and also broke the low of this candle. So you had three opportunities to short. This was the best opportunity because here's your line of resistance here. If for some reason we head back up there, your stops are nearby. I told many of you guys in this area to not short too heavily because there could be a move up. And anywhere in this range, we could make a lower high, which would still put us in a downtrend. So if we go ahead here, draw another lower high shoulder over here. So this is a little bit too early to call this a swing pivot, but you can be a little bit aggressive looking at this candle formation that we probably have a swing high. So we should see this line hold here. We should see this high here hold. I expect some more downside here. So the first price target I have for the downside is in the 204 area. This was where this last swing low was. Let's see, the low on this was 204.12. So if this downside is going to continue, we can expect to be at 204.12 rather quickly. Now, it's really important to watch price at this point. When we get to 204.12, do we get a sudden bounce, and does the bounce hold, or do we come crashing through? If we come crashing through on a big red bar, it'd be a good idea to take some profit. Just like how we had a big red bar here, it'd be a good idea to start taking some profits, because most likely when we break a trend line, I've mentioned this many times, once we break a trend line, the first initial reaction is try to go ahead and get back above it. That's when you get your dip buyers, you get your short coverings. It might push the price back up into this area. And so from the profit that you have here, once we get back into the 204 area and you see another bearish confirmation, you go ahead and can reshort the SPY and look for another leg down. So here on the 204.12 is the next price target. The full price target of this measured move I have pegged at 195. 191, 192 area. So 190, 190 to be exact. Let's go ahead and also take a look at the hourly. if you take a look at the hourly, we're gonna get confirmation on a finer grain level that we have here, head, here shoulder, here shoulder. And if we go ahead and do the measured move from the hourly time frame perspective, we're going to look at a measured move. Let me see here. We're going to see a measure move into the 197.85 area. And so this 197.85 is going to be lower than the 204 area. So that's where I would look first, is the 204 area. Breaking that, we can get into the 197.85 areas pretty quickly. And then it's only a few more points to get back down to the 191, 192 area. So those are the things I'll be looking for. If we for some reasons break above this line, we'll have to really reassess. You might want to cover if we get above this line, but otherwise just be patient. We may not move straight down. I have a feeling that we'll get down really quickly, but if we don't, just be patient. It might crawl up along this line again and head back over. We have to shake out all the optimistic persons before we can fully head lower. When there are no more buyers, we'll see a quick drop. So that's it. That's the video for today. If you liked the video and you found it educational, please click on the like button below the video. And if you like to keep updated with my videos, please click on the subscribe button, and we'll keep on following this trade and let you know if anything changes in terms of the sentiment. Thanks for watching.